Imagine waking up on an ordinary morning, reaching for your phone to check your balance only to see your banking app refuse to open. You try again. The screen freezes, and a message flashes, "Service unavailable." You rush to an ATM. But the machine isn't just empty, it's offline. Cards stop working at stores. People stand confused at checkout counters, and small whispers of panic begin spreading through social media. Within minutes, rumors explode. Are banks down? Is this a cyber attic? Has the financial system collapsed? That subtle, invisible infrastructure we trust every second of every day suddenly feels fragile. And that's where our story begins. The world today runs on digital threads so thin we barely notice them. We tap a card, money moves. We pay salaries, bills, loans, all without touching a single note of cash. Banks aren't just buildings, they're the beating heart of the modern economy. But what if that heart suddenly stopped? Today, we're taking a step-by-step journey through a scenario most people never think about, yet every government quietly fears. Not a distant future disaster, but something that could unfold in real time. What happens if banks shut down tomorrow? This isn't just about losing access to money. It's about watching society slow to a crawl as every transaction, every business, every supply chain relies on a system that we assume will always be there. So let's explore how fast things unravel, how governments scramble to respond, and what this fragile moment reveals about our dependence on banking, because once the system stops, the world, changes instantly. In the first hour after banks shut down, confusion spreads faster than the news itself. ATMs stop dispensing cash, banking apps freeze, and people assume it's just a technical glitch. But as minutes turn into an hour, a strange silence builds. Stores begin reporting payment failures. Cards decline everywhere, and social media fills with urgent posts asking what's happening. Without any official announcement, people fear the worst. A cyber attic, a bank run, or even a national emergency. This uncertainty becomes more dangerous than the shutdown itself, because when information disappears, panic quickly replaces logic, and that panic becomes contagious. By the end of day one, businesses feel the shock more than anyone. Grocery stores can't accept card payments. Restaurants stop taking orders, and online businesses suddenly collapse because no one can pay. Even companies with millions in their accounts can't access a single dollar. Small shops close early, assuming things will be fixed soon. But larger companies panic because every second without transactions means heavy losses. Delivery services freeze, suppliers halt shipments, and marketplaces go offline. This immediate halt exposes a hidden truth. Businesses don't survive on money alone, they survive on the ability to move money, and that system just died. When banks shut down, the digital economy collapses overnight. Salaries scheduled for transfer never arrive. Rent payments bounce. Utility bills are marked unpaid. People watch helplessly as their banking notifications pile up with errors. Millions technically have money, but can't access even a fraction of it. Automatic payments for mortgages, phone bills, insurance, and loans fail, triggering late fees and warning messages. For many, stress turns into fear, because missing just a few payments can lead to long-term financial damage. This is when people finally understand. The banking system doesn't hold just their money, it holds their ability to function in society. As banking shuts down, global markets react instantly. Stock exchanges open to chaos, investors panic because the financial heart has stopped beating. Companies depending on daily cash flow lose billions in value within minutes. Meanwhile, crypto markets explode with activity. Some rush to convert what they can, hoping digital assets remain accessible. Prices spike, then crash violently as panic spreads. Without banks, liquidity dries up, trades become unstable, and fear becomes the main driver of every market movement. Within hours, a banking shutdown transforms into a global financial earthquake, shaking everything from Wall Street to small investors' savings. Governments cannot stay silent. Within hours, emergency meetings take place in central banks, finance ministries, and security agencies. Leaders address the nation, asking people to stay calm and promising that money is safe. They may impose temporary transaction limits, announce a national bank holiday, or release emergency cash to essential sectors. If a cyber attic is suspected, cybersecurity teams activate national defense protocols. Officials coordinate with international banking networks to prevent a global financial domino effect. But behind closed doors, they know the truth. Public trust is fragile, and one wrong message can trigger mass chaos that becomes impossible to control. The global supply chain starts collapsing quietly, but quickly. Banks shutting down means importers can't pay foreign suppliers. Shipping companies can't clear transactions, and factories can't order materials. Within days, shipments of food, fuel, medicine, and essential goods slow down dramatically. Trucking companies struggle because fuel distributors demand cash. Retailers run out of stock because warehouses stop releasing goods without confirmed payments. What begins as a financial crisis becomes a logistical crisis, turning into a shortage crisis. Suddenly, the world realizes how interconnected everything is and how one broken link in the banking chain can shut down entire economies. For ordinary people, the crisis becomes personal. Savings become inaccessible. Debit and credit cards turn useless, and even simple tasks like buying groceries become impossible without cash. Families with emergency money manage for a while, but millions have no backup plan. Renters panic because they cannot transfer payments. Parents worry about feeding their children, and many begin searching for cash anywhere they can find it. People attempt to sell personal belongings, but without digital payments, buyers hesitate. Fear rises not because people are broke, but because their money is trapped. This is when society feels the true weight of a banking shutdown. Could banks really shut down tomorrow? It sounds extreme, but history shows it's not impossible. Greece froze bank accounts in 2015. Lebanon limited withdrawals in 2019, and Cyprus seized deposits in 2013. Modern risks: power grid failures, systemic financial collapse, or mass bank runs make the system more vulnerable than people think. Central banks build layers of protection to prevent shutdowns, but no system is perfect. The real question isn't could it happen, but how prepared are we if it does? Understanding these risks helps people protect themselves, diversify their savings, and avoid being helpless if the unexpected happens. In the end, the real danger isn't that banks will suddenly shut down tomorrow. It's that most people have never imagined what life would look like if they did. Our entire financial system is built on trust that money will move, payments will clear, and banks will always open their doors each morning. But as history has shown, that trust can crack faster than anyone expects. The purpose of this video isn't to create fear, it's to create awareness. Because the more you understand how fragile the system really is, the better prepared you become for any crisis. Cash flow service, diversified assets, and basic financial preparedness aren't paranoia, they're protection. Remember, the world doesn't collapse in one big moment. It collapses in a chain of small failures, and the people who think ahead are always the ones who survive the storm.